In the intricate and often unforgiving world of high finance, certain individuals transcend the norm, leaving an indelible mark not just through their accumulated wealth, but through their revolutionary impact on the very mechanics of the market. Ken Griffin is unequivocally one of these figures. His journey from a Harvard dormitory to the apex of the hedge fund industry serves as a masterclass in financial acumen, strategic foresight, and unwavering discipline. Griffin's story is not merely one of accumulating capital. It is a testament to the power of calculated risk-taking and an unyielding commitment to innovation, a formula that transformed his firm Citadel into one of the most formidable and successful hedge funds in modern history. Examining his trajectory offers profound insights into the principles that underpin enduring success on Wall Street, revealing a blueprint for navigating market volatility and achieving sustained market-beating returns. Kenneth C. Griffin, born on October 15, 1968, in Daytona Beach, Florida, has carved out a reputation as one of the most brilliant and influential financial minds of his generation. With a personal fortune estimated in the tens of billions of dollars, he is a figure synonymous with the cutting edge of quantitative and multi-strategy investing. However, to truly comprehend his ascent, we must rewind to his formative years, where the seeds of his financial empire were first sown. His story begins not in a polished boardroom on Wall Street, but within the collegiate confines of Harvard University, where a precocious talent for the markets began to reveal itself with astonishing clarity. This early start would lay the foundational framework for a career that would redefine the possibilities of hedge fund management and market making. Griffin's extraordinary aptitude for investment became apparent as early as his freshman year at Harvard in 1986. While his peers were engrossed in standard undergraduate studies, Griffin was already operating on a different plane. In a move that has since become legendary, he famously installed a satellite dish on the roof of his Cabot House dormitory. This wasn't for entertainment. It was his lifeline to real-time stock quotes and market data, giving him a critical edge in an era before ubiquitous high-speed internet. With this direct feed, he began actively trading, focusing initially on complex instruments like convertible bonds. His approach was not that of a casual speculator, but of a serious, data-driven analyst, meticulously identifying arbitrage opportunities between undervalued convertible bonds and their underlying stocks. Recognizing the potential for substantial returns, he quickly moved to scale his operations. He secured approximately $265,000 in capital, a mix of funds from his family, including his grandmother and friends, and with this seed money, he established two distinct hedge funds right from his dorm room. This period was more than just a successful side hustle. It was Griffin's baptism by fire. His nascent funds were put to the ultimate test during the infamous Black Monday market crash of October 19, 1987. While seasoned veterans and established firms were wiped out by the unprecedented volatility, Griffin's innate grasp of risk management shone through. By strategically shorting the market, he not only preserved his investors' capital, but generated significant profits amidst the chaos. This remarkable feat validated his analytical prowess and demonstrated a level of composure and strategic thinking far beyond his years. By the time he graduated from Harvard with a degree in economics, the young prodigy had already turned his initial stake into his first $1 million, setting the stage for his monumental entry into the professional world of finance. Upon graduating, Griffin's reputation preceded him. He was introduced to Frank Meyer, the founder of the Chicago-based hedge fund Glenwood Capital, who was immediately impressed by Griffin's track record and sophisticated understanding of the markets. Meyer entrusted Griffin with $1 million to manage, and within a year, Griffin had delivered a staggering 70% return. This resounding success gave him the credibility and the confidence to strike out on his own. In 1990, at the remarkably young age of 22, he moved to Chicago and founded Citadel with an initial AUM of $4.6 million. From its very inception, Citadel was engineered to be different. Griffin eschewed the traditional, top-down investment model where a single star manager dictates strategy. Instead, he pioneered what would become known as the multi-manager, multi-strategy platform model. Its quantitative structure was Citadel's foundational genius. The firm was not a monolith but a collection of dozens of small semi-autonomous investment pods. Each team was comprised of expert portfolio managers, analysts, and traders who specialized in a specific, distinct strategy, from statistical arbitrage and convertible bonds to event-driven investing and long-short equity. This decentralized framework offered several profound advantages. Firstly, it created immense diversification. If one strategy underperformed, it wouldn't sink the entire firm. Secondly, it fostered a highly competitive yet collaborative environment, allowing Citadel to attract and retain a diverse pool of top-tier talent, empowering them to operate within their sphere of expertise. This model effectively decentralized risk while centralizing oversight and technology, allowing the firm to scale rapidly and adapt to changing market conditions with unparalleled agility. Under this pioneering structure, Citadel experienced explosive growth, quickly evolving from a small Chicago startup into one of the world's largest and most powerful hedge fund institutions, managing billions of dollars in assets. The bedrock of Ken Griffin's investment philosophy is a sophisticated and deeply analytical approach to risk. He operates from the fundamental understanding that risk is an inherent, unavoidable component of investing. The key, in his view, is not to avoid it, but to meticulously measure, manage, and price it. This principle is woven into the very fabric of Citadel, where rigorous quantitative analysis and stringent portfolio management protocols are paramount. His strategy is not monolithic. Core tenet of his success is strategic diversification across a vast array of sectors and asset classes. Citadel actively seeks opportunities in disparate fields like energy, technology, consumer goods, and financials, often capitalizing on market dislocations and downturns when others are retreating in fear. This allows the firm to generate uncorrelated alpha streams, insulating its performance from the whims of any single market trend. Furthermore, a defining characteristic of Griffin's strategy has been his visionary and aggressive investment in technology. Long before fintech became a ubiquitous buzzword, he recognized that in the world of trading, speed and data processing power were decisive competitive advantages. He poured billions of dollars into developing proprietary state-of-the-art automated trading systems, data analytics platforms, and risk management software. This technological supremacy allowed Citadel to execute trades with microsecond precision, analyze vast datasets to identify fleeting opportunities, and maintain a real-time, granular view of its risk exposure across the entire firm. This relentless focus on technological innovation gave Citadel a formidable moat, enabling a level of efficiency and execution speed that few competitors could match. Griffin's core investment principles reflect this data-centric, disciplined mindset. He is famously dismissive of market rumors and narrative-driven speculation, preferring to ground his decisions in rigorous technical and quantitative analysis. He adheres strictly to predetermined strategies, minimizing emotional decision-making and avoiding the temptation to blindly chase fleeting, higher-risk opportunities. Despite his meteoric rise, Ken Griffin's journey has not been without severe trials. The greatest test of his leadership and Citadel's resilience came during the 2008 global financial crisis. As credit markets seized up and global equities plummeted, the hedge fund industry was brought to its knees, and Citadel was caught in the maelstrom. The firm's two largest flagship funds, Kensington and Wellington, suffered catastrophic losses, plummeting by 55%. Faced with a torrent of redemption requests from panicked investors, Griffin made a difficult but decisive choice. He imposed a gate freezing investor withdrawals to prevent a fire sale of assets at distressed prices and protect the fund from a complete collapse. This controversial move bought him precious time. Behind the scenes, he led a radical overhaul of the firm's risk systems and operational framework, strengthening its foundations to withstand future shocks. The comeback was as dramatic as the fall. Through sheer determination and strategic repositioning, Griffin steered Citadel back to profitability. In the decade following the crisis, from 2010 onward, Citadel embarked on a period of historic dominance. The firm consistently delivered exceptional market-beating performance, solidifying its reputation as one of the most effective and resilient hedge funds in history. The culmination of this recovery and growth was witnessed in 2022, a year when many funds struggled amidst rising interest rates and market volatility. Citadel, however, generated an astonishing $16 billion in profit for its clients, the single largest annual gain ever recorded by a hedge fund, surpassing even the legendary trades of figures like George Soros and John Paulson. This triumph was the ultimate vindication of Griffin's crisis management. His strategic foresight and the robustness of the multi-manager model he had pioneered decades earlier. Beyond the realm of financial markets, Ken Griffin's influence is felt in multiple spheres. Within Citadel, he has cultivated a culture of extreme meritocracy and relentless ambition. He is known as an exceptionally demanding leader who expects nothing short of excellence from his employees, fostering an environment where complacency is the enemy and continuous improvement is the only standard. However, this high-pressure culture is balanced by immense rewards. He is famously generous to top-performing individuals, understanding that attracting and retaining the best talent is paramount. This ethos has shaped a generation of traders and portfolio managers who have passed through Citadel's ranks. Outside of his firm, Griffin has become one of the most significant philanthropists of his era. He has donated billions of dollars to a wide range of causes, with a particular focus on supporting educational institutions like Harvard University and the University of Chicago, advancing medical research and enriching cultural organizations such as the Art Institute of Chicago and the SEM of Modern Art. His passions extend to being a world-renowned art collector, with a private collection that includes masterpieces by Jackson Pollock and Willem de Kooning, and a shrewd real estate investor with a portfolio of trophy properties across the globe. Ken Griffin's legacy, therefore, is multifaceted. He is not just the Wolf of Wall Street who built a financial empire from a dorm room, but a complex figure whose impact resonates through technology, philanthropy, and the very culture of modern finance, leaving an indelible mark on the world he continues to shape.